Obviously, the Greater China UBS Conference is an articulation, it's a reminder to your clients of the importance of the China business to UBS. Spell out that importance for us, and if you are able to, can you give us a time frame as to when you hope to see the business here in China become profitable?
China continues to be, recovering well. And with the opening up that was decided at the last 5-year plan, that is a golden opportunity for many international banks, including UBS. And if you look at last year, there was an explosion of, listings on the A-shares market in Hong Kong of Chinese companies internationally. And that is a trend that continues. Actually, it gets accelerated by the current environment. So the investment bank is well positioned to protect its leading franchise there. Asset management, we want to develop more local capabilities so we can bring investment solutions based on China investments into the global client base that UBS has. And of course, wealth management, there's a huge potential for being the wealth manager of choice for a vast amount of Chinese, rich individuals that want to invest internationally, that want to invest both in mainland China, which we can facilitate, but also abroad, and also wealth management clients from around the globe need more China exposure in their portfolios. So it's the outside in, inside out business that we pursue as a non-domestic bank. And so far, that's been working quite well for us.
Okay, so where does that leave us in terms of the time frame for profitability?
Well, look, profitability, in my view, is really, it's hard to account for. It's not just whether the Chinese business in isolation does have a positive net contribution to profits. It really is the holistic offering we bring to our clients. And in that sense, it was profitable all along that we invested in China.
Okay, and you talked about the wealth management aspirations. Are you any closer to finding a partner, a JV partner, to expand the wealth management business here?
We have capabilities where client advisors do portfolio investments and portfolio choices with our clients through virtual interaction. And that part of the business has become stronger. And China is a fantastic testing ground for digital capabilities in wealth management. So our focus is on those capabilities. And we're looking into partners, but it's a combination of traditional brokerage business and wealth management and digitalization of that business. And I think in that sense, we haven't yet identified one partner that we want to work with, but we're in contact with many. And I think it really is a race of multiple investments and multiple partners you do different things with, rather than a single holistic commitment to a single partner onshore.
Any plans for acquisitions in China to kind of keep that competitive edge?
We do continue to look at opportunities, but at the moment, we really want to see the dust settle first on international relationships, on China's role in the global economy, how the US-China relationship pan out, how the European agreement, offers opportunity, and whether Switzerland, which is our home base, can join any of these endeavors.
Okay, and we're seeing some very real impacts of this US-China capital market decoupling, at least at the fringes in the last few weeks with the delisting of some of these Chinese companies. What is the effect, do you think, of that decoupling of the markets, the capital markets, the impact on a business like UBS?
Under the current environment, you will see some headwinds for China when it comes to their companies going global. At the same time, China is such a strong growth factor and drives the global growth at the moment that it's impossible not to have China diversification in your portfolios. So, there are plus and minuses. You see US banks take bigger shares in China endeavors like we have done. And for me, that's a good sign. Everything that the global banking community does, investing in China, is something that will add banking and international finance and bring capital to China, as well as bring the huge capital sources that China has to the global economy. The key thing about China is really the massive client base that it can offer. And it has a evolving and, it has a middle class that is becoming stronger and stronger. And for us as a wealth manager, the investment needs of that emerging middle class in China are the key driver for our future profitability.
Do you have a view on whether relations between Beijing and Washington will improve or continue to deteriorate under a Biden administration?
So I don't think that they will continue to deteriorate. I think, the Biden administration is not going to roll back some of the measures in terms of tariffs that have been decided by the Trump administration. But at the same time, they're not going to add new ones. So in a way, we're going to see a more friendly international engagement of the United States, not just with China. There have been some tensions between administration and the Europeans as well. There was the whole NAFTA discussions that we had. So I think in general, Biden administration will be a more international administration. It will be more reminiscent of the administration that we had under Obama. And therefore, international engagement will be a lot more predictable.
And talking of the global economy, the last time we spoke to you in December, you said there's going to be no quick fix, but that was before we had this blue sweep. The Democrats now in control of the Senate, of course, as well as the House and the presidency, or they will be from January the 20th, and pledges as well for pretty aggressive additional fiscal stimulus. Does that change your view on the economic recovery?
We've actually downgraded our short-term projection for the first quarter, and for the last quarter of last year, we're probably now going to see a double-dip recession in Europe, where the fourth quarter will be, quite negative, around -2%, and where there is a carryover into the first quarter this year. I think that as vaccination gets rolled out, there is actually light at the end of the tunnel for the second half of this year, with a strong rebound of the global economy. And the way there might be through a double-dip recession. So that's a short-term headwind, but medium to long-term, things are brightening up.
How does that inform your views about equity valuations? Are you concerned about valuations, or are they rational given that outlook?
No, so for the short term, neither the European Central Bank nor the Federal Reserve nor any other major central bank is going to change their programs. That's going to provide some good tailwinds for the global economy. So we expect a pretty strong rebound in the year 21 at the end of 21, and then even, and a carry on into 22.
Okay, you touched on the ECB. It's always worth getting your views on the ECB, of course, given your previous position at the Bundesbank. They have, of course, extended their bond buying purchases by 500 billion euros. They're going to extend that at least until March of 2022. Have the ECB done enough then, do you think?
The current policy measures are extraordinary policies for extraordinary times. As we come into more normal times, I would expect a normalization of monetary policy to be the right answer. I doubt that the global central banks will give that answer anytime soon. So I don't think they will raise interest rates during the course of 23. It's not expected for the United States. It's not expected for Europe. I think at best they might stop their purchase programs with tapering them slowly, which doesn't mean they stop buying totally. They just reduce the number of purchases and continue to reinvest. So this monetary policy will be with us for a long period of time. And I dare say maybe too long, because what we saw last time around is we didn't get to normality in the 10, 12 years after the financial crisis. And that gave us very little room for maneuver at the central banks when we entered into these new crises. Same is true for fiscal policy.
What is the board's current view of the Dutch investigation into the CEO Hummers and these money laundering allegations linked to ING? What is the view of the board at this point?
Regulators have much more means than we as a board to look into this matter, but we're very convinced that, for us, nothing has changed at this point in time. There are no new news. We're monitoring the situation, and we'll update it as events happen.
How confident are you that he will remain as the CEO?
I'm very confident that he has all the ability to do a good job as CEO of UBS, and that's where we are, and there's no further update on that.
Okay, I want to get your views on M&A and consolidation in the banking space. You've been a strong voice on this in the past. What is your view? What is the forecast for consolidation within the banking space this year?
My view, and I've voiced that repeatedly, it should happen in a big bang. There should be a pan-European banking market, and we need to get there not in an evolution over the next 20 years. We need to get there now. And we need to get there because of the challenges coming out of these COVID lockdowns, that finance is needed to channel money where it's best used. And Europe needs a deeper capital market, and that will not happen in a fragmented environment, just as a deep US capital market would have not happened in a fragmented environment across US states. So I think Europe needs to grow into a true union. And in that context, banks will consolidate. You see that at the moment, banks in Europe don't pay dividends. They don't do share buybacks. So they're in quite a different situation than US banks. And in order to be internationally competitive, they need to grow in size. China is a market of size. The US is a market of size. Europe is a fragmented market and lacks size. And that is reflected in the balance sheet and profitability of its banks. We as a Swiss bank are very international. Our major growth is not in Europe. In Europe, we have an historical relationship, but our growth is in China and in the US. And that's where we've invested resources. That's where we're looking into organic and inorganic growth. And when I said in the past, that there will be consolidation, I didn't necessarily mean that UBS will be a consolidator. We do have the strengths to be a consolidator because we have a rock solid balance sheet and a good capital position. But international acquisitions are very difficult to do. As a chairman, you wouldn't plan them just a few months away from your last year as a chairman.
Should we take from that then, Axel, that Deutsche Bank and BNP Paribas are no longer on your list of potential targets?
There's a lot of acquisitions that don't bring you much further if you're looking at smaller acquisitions than that organic growth of UBS. If we want to grow, and if there are opportunities in wealth management or in asset management, we will take those opportunities. More general retail or universal banking opportunities are a major distraction for many years to come for all banks that go through such an acquisition, and it's not our top priority. Our priority is to grow wealth and asset management organically or inorganically with a global number one. We want to continue to be in that place, so we need momentum, but we want to also put some distance between us and number two, and that's where inorganic options really become an option.